Hey, welcome to the weekly meeting, 1026, the last week of of October. Last week of October. So this is crunch time, man. We got 2 months left to get all your 2024 dreams in to perfect your strategy or whatever it is that you're doing and to run that bag up. Um, hopefully everybody is finding some level of success. And if you aren't, then I don't really know what to tell you. Reach out to somebody who has found that success, maybe, or or you know, be humble enough to listen to somebody uh, who has found a success to try to give you that free game. Um, we have a lot of great opportunities coming up. We got the election. For whatever reason, we lowered the interest rates by 50 basis points, and the dollar has been going straight up, straight up. So, um, I think a lot of stuff is probably uh, a little bit rigged. Market makers have to make they coins just like the rest of us. But there is a way that you can stay out of the way and still collect your bag. I don't know if y'all's strategy still works, but mine works like a charm. And I'm gonna go back through it today. Um, and I trade any candle closure. I trade the same way, right? Um, the the candles when they close, I want to see them pull back to the 50% and then keep pressing up. So in a scenario like this, I would have wanted this candle to pull back. This one did not. So this would have been a no trade for me, right? Um, it doesn't matter what time frame we're trading on. I want to see when this candle closes. I want to see this pullback. If this pullback is 100 pips, I'm interested. If it's not, then I'm not interested. It's really that simple. And you trade this strategy on a high enough time frame, those trades really start to pan out and pay out. Okay. Um, and when you trade it on a high enough time frame, uh, you don't get faked out by moves like this, right? I mean, this move can happen on a higher time frame, but this wick right here might be over 100 pips. And here's what I mean, right? Uh, the more money that we make trading, the less that we will have to trade, right? Because if you are doing this the way that I like to do this, right? I don't want to trade and spend the money that I make trading. I want to trade and grow my trading account. And the bigger my trading account gets, uh, the less number of trades I have to take to make significant money, right? If I have a 50K trading account and I take a 100 pip trade, I can make 5 grand on that trade. If I have a 500,000 trading account and I take that same trade, then I can make 50K on that trade. So if you take the long approach in trading, then you can end up growing your account. And if you're not worried about how long it takes you to grow your account, you can take a very safe route to grow it, right? Um, you know, if you think about prop firms, and I don't want to sound like I'm a supporter of the prop industry because there are some very shady firms out there, and they go down. I've been a victim a couple of times on prop firms crashing out. Um, But if if I had it all to do over again, and I really think about it, there's an easier way to approach the prop game, right? And if you're taking one trade every month on a prop account, and you got like 100K or a 200K account, you can really streamline the growth process, and you can do it relatively safely because those monthly trades they pay out. Like when the move happens, it happens, and you know I think probably in the high 90s security wise. So if I go to this monthly chart, I'm just gonna walk you through it. Um, this monthly candle on GN, it's bullish, right? Right now, with a week left, this thing has went 659 pips, right? So I don't have to be a rocket science, throw the fib on here and expect about a 300 pip pullback, right? So if this trade pulls back um, with the new month candle, right? And I assume that it's going to pull back, for a few different reasons. But hey, just for pullback purposes and not to get any arguments, I'm just going to line this trade up like this. I'm going to take my fib off of it, and I'm just going to assume that this is going to pull back to this level, right? To my golden zone, maybe my 78, right? I'm going to drop to the 4-hour time frame just to see if I see any imbalances or something in my zone here that would be a draw on liquidity, right? I see these double lows before we get to the 50. And then after the 50, I got imbalance. And depending on how you think as a trader, if you think like me, where you see this move push down, maybe it's pulling back to the 78, right? Maybe that's how you're thinking as a trader, and I would probably agree with you if you were thinking like that. Um, if you're thinking that this move is going to continue bullish, I would think you was a little bit slow, but it can continue bullish. It doesn't matter. It doesn't matter what we think, right? Maybe this week we take out this high, right? Maybe this week we go up there and take out that high, and then we start the pullback. If you believe that this is going to pull back to your zone, right? There's equal lows there and go higher. That's cool. That's cool because let's just say we end the week somewhere around here, right? And we can take this trade from here to here. That's 300 pips, bro. 300 pips. And if you can't figure out how to make your money in them 300 pips, you're probably not really a trader, right? I'm just going to go out on a limb and say that this trading is probably not for you because this 300 pips should be able to feed a family for at least a month, But this is my whole point. These opportunities happen every month, right? And I get it. Some people out there be like, well, Ty, how we know that it's going to act right, right? And then I just point to this example up here because this is a good run up, and this is probably going to happen at the end of the month, and it does. You see, it says July 29th, end of the month. End of the month. Once this candle broke and closed below the moving average, it was time to hop in. Now, I get it. The 4-hour time frame might be troubling to some people. But, shout out to my girl, Erica. She used 18 hours. Once you got this 18-hour candle closure, right? And this pullback, you could have got in this trade right here. You could have protected to the top of this candle or halfway up. You could have hedged. It doesn't matter. You could have done whatever type of protection you wanted to. Maybe at these lows, maybe a little bit higher. It doesn't matter where you would have protected. This trade pushes down. This initial push to this bottom is 335 pips. Everybody could have been good. Then it pulls back. Then it pushes down again. Oh, look at these nasty Look at the nasty pippage. And I'm not suggesting that anybody should have been greedy, but there are some people who would have targeted this area, which that's where my arrow is. This area was my target, and it eventually pushed all the way down to it. Okay, but here's the point. The point is, if you're on the funded account and you got in this trade, it would have taken you 1, 2, 5 candles to make your bag, to make your money. Maybe you'd have targeted that low, 6 candles, right? 6 days, a little bit less than 6 days, 1 week, you got paid. 1 week. The first week, you got paid. Now you're done for the rest of the month. Because if you have a 100K account, right, and you're trading with 5 lots, you're trading with 10 lots, whatever I don't know, whatever you're trading with, even if you're trading with 1 lot and you make 3K, we're gonna just assume. I know GN is not $1 per pip, and it's not $10 per lot, right? It's more like six and change. So if you're trading with let's just say you make $1,000 per 100 pips, and this goes 300 pips, you made $3,000. And now you're done to the next month. That $3,000, whatever you do with it, maybe you put it in your trading account. Maybe you use it to buy you a ticket to Thailand where it doesn't cost $3,000 to live. And you just do the same thing the next month. So the next month you get the same trade, and you run that bag up. If you're making $3,000 a month or $2,000 a month, and you're living in an area, if you do the smart thing and you go overseas, where you don't have to pay for your life, the American life or the British life or the Western life, where they lie to you and tell you need all these things, and you stack your bread. In 1 year, you can come back to America, you can go back to Britain, but you can go back with a fat pocket, right? Because if you're pocketing this money or you're compounding this money in your personal account, but you have to be disciplined enough just to trade it once, then you're going to make a killing. And these moves are undeniable. Like you can't say you didn't see that candle closure beneath your moving average. So, I say all this because, here we go again. The end of another month. And when I look across these monthly candles, I'm never going to trade this type of a monthly candle when I have this fat, meaty candle, right? But if I look at the USD candle, it's the same thing. If I look at a JPY candle, it's even more ridiculous. It's like 800. If I look, like you have all these opportunity. And, it's not like this is the first month that this has happened. Like I wouldn't trade this one, but this is not the first month that this has happened. This happens every month. But my point is, if you take the time to go and you scout these moves out, you can find several that will probably line up in a manner that offer you great opportunity. And you just need to take one, right? You might write 5 of these down, and you say, I'm not going to discriminate. I'm going to sit on my 18-hour chart or on my 4-hour chart or whatever chart you're using to see these trades break structure or give you a chalk or crossover. That's the chart that you're going to sit on, and you just flip through the ones that qualify, and whichever one crosses first, you enter. And you're holding that trade just to the golden zone. Like you don't have to hold it the whole move, right? You can hold it just to the golden zone. Chances are, if these candles are big enough candles, right? Some candles, I think this might be 400, 424. This is a 424, right? If I fib a 424 candle, I'll be looking for 200 and some pips back to this golden zone. Let me just move So I don't necessarily have to catch um, the entire move because really, me personally, I need that 100. I can get jiggy with 100. But if this is going to give me 216 to my golden zone, right? 216 to my golden zone, then I'm straight. Like if I can't look and decide where the candle is actually going, like what in my golden zone is calling the candle, I can just trade it to the golden zone and catch my 216. And I can make my money for the month with that 216. Um, it's it's not it's not as difficult as we make it. And just because we have people in here who can make their profits dance, all that's not everybody, and you have to be okay with where you are as a trader, right? Um, you might not catch every move back and forth, but be responsible enough to take one move to where it's going, and understand that the thing that gives you the advantage on this chart is it's a monthly chart. This is going to take a few days, maybe a week, maybe 2 weeks to get to where it's going. It shouldn't be a problem with how long it takes, right? The fact that it's going should be good enough. Like if you would fib this candle and you knew you had a trade coming back, this trade went up first. So you wouldn't have entered that trade until it came back and crossed over the moving average. And then you would have caught that trade. And this little trade coming down is over 300 pips. This is how you can run a bag up and do it relatively safely until you build the confidence to drop down in those time frames, right? And the thing is, as traders, all we have to do is wait for our signal, right? If I think that this trade is selling, I'm not getting in the trade until it crosses over the moving average. And then I will get in the trade to take this going down, right? So when this trade came here, and I thought this trade was going to buy, somebody got in this trade way down here, right? Somebody probably got in the trade when it ran this low right here. As soon as it ran the low and came back up, they probably got in the trade. But you don't have to be an early participant. You could have waited until this trade crossed here and then pulled back, right? You could have gotten this trade on the pullback and caught all that move. It's still perfectly fine. You just have to understand where you are as a trader. It might not be the early entry person. You might be the, hey, man, I got to wait for confirmation. This is an 18-hour chart. If you use a 4-hour chart, it crossed over way before it did on the 18-hour chart. And that's okay. There's nothing wrong with whichever one you're using. This higher time frame is going to give you a more solid verification. The 4-hour is going to give you a verification, but maybe you don't believe in that 4-hour. Man, 4-hour, man, 4-hour be playing too much. So if you don't have something that works, man, this works. I mean, I've done this a million times, and it's a slower trade, but it's a guarantee. It's more of a guarantee than it is on the 4-hour chart or the daily chart. This is a 1-month candle that's going to pull back, right? And if it doesn't pull back, it's just not going to cross over. It might pull back a little bit and keep going. Or you just get that next candle that pushes out. So if you back test this, I'm sure you will like what you see. Do I have any questions? All you have to do is pick the candles that have moved, hundreds of pips. We have several. Any of these JPY candles, the dollar candles,
I got a question, Kai, real quick.
What's up?
Because on the monthly, I don't months like that, but you'll wait for the pullback to start at the beginning of next month, right? And then when it crosses over, that's when you take it? Or you think the pullback will happen before the month is actually over?
No, this monthly candle has to finish first.
Okay.
So the way I like to look at it is normally around the 28th, you're going to start seeing the pullbacks, right? Because what happens is the top wick of the candle is going to get created too. So on around the 28th, you might have a push down, then it's going to pull back up, and then it's going to come down, right? That's generally speaking how it looks. As a matter of fact, if you go back and you look at these, let's just go look. What month it was at? September. October. Okay, this is the end of September. You get the push down and you get the pull back up. And then the move happens. Now, this particular candle, if you would have caught this UCAD move, you would have made about 217 pips, right? Because maybe you wouldn't have made that much. But when this candle closed, you could have entered on this candle, right? Maybe you would have expected a pullback. You would have entered on that candle and you would have caught 201 pips down before it pushed back the opposite direction. So you have to look and be aware of your keys. But generally, you're going to get a push down, a pull back, and then the move. And this push down happened on the 28th.
Oh, now I understand when you look down. I just want to know what day you actually look. Okay, so it's like a couple days before the action. I got you.
Yeah.
Sometimes I'll be looking around the first. Now, I think I've already missed it.
So well, if you look right on, but that's what I'm saying. Like, so going into the week, we know what time it is. Like, we know this is the last week of the month. So I'm scouting my move now. You know, like I'm not going to wait until the last day of the month. I'm scouting my candle now. I already know at the end of the month, this UCAD candle has went crazy. Right? The only thing left that this candle can do is probably knock off this wick. Maybe we do that, maybe we don't. I don't give a darn. You know, I don't necessarily have to take a trade this week because this big juicy trade is the setup. No matter what type of funded account that I have, the move that I'm going to get next week trumps anything that's going to happen this week. We got 4 days left, 5 days, but 4 days left, 4 trading days left on this month. Nothing can happen next week that's going to pay me more than this move back to this moving average. I mean, to this zone. The same thing with GN, the same thing with them JP, especially them JPYs. The JPYs look crazy.
I have a question.
You said what?
I have a question.
Yes, sir.
Like, is this how you enter your trade, or you have a different way of entering your trade?
Because I have a different way of entering my trade. But what I'm saying is, if you don't know, if you don't have a good entry technique, that crossover on your moving average is a good entry. That's a good entry signal. I enter on the 15-minute chart, but I'm not suggesting that everybody in here knows how to drop to the 15 to get an entry. It's just, that's not a reality. Some people are only good on the 4-hour chart.
I mean, you can also maybe you can teach them like how to enter from the lower time
I
frame.
got I got I got 100 videos teaching entry. Everything that we talk about, um, in this group, I have 100 videos where I've shown examples. The ugly truth is, um, this is a free group, and everybody's just not interested in free, bro. Like there, if this was a paid for group, then you're paying for something, so you're going to maybe value it a little bit more or a little bit differently.
That's true. That's true. I always tell people, when somebody approach me, I always tell them like, you really want to get serious. I can teach you, but I don't want you to pay me. I want you to pay someone else to teach you. Then I can help you with every other thing. Because
Right.
if I'm teaching you for free, I'm sure you will need to take it serious. So what is the point of wasting my time? But if you paid for it, then you will be eager to learn. Because what
Exactly.
you don't understand from your mentor or whatever, you would like to, get explanation about it or something. Like you will be looking for somebody to explain it to you. So I'm here to help you with whatever it is.
And
So that's it. I don't want you to pay me because I don't want your money. I'm making money from the market. So
yes,
how much are you going to pay me that is going to
exactly. I mean,
build
that's
me a
exactly
mansion or buy me a Range Rover, a Lamborghini or something? No, I don't need your money.
exactly. And here's another thing, right? Like this particular candle, it didn't pull back. That's because you're not supposed to enter on it. But now this move is coming back, right? If you feared this whole move, now this move is coming back. It's in your zone. This first time it wasn't in your zone. You're not supposed to force this trade. You're supposed to wait for this trade to come back to your zone. Now you'll have an opportunity to enter. And this week it's probably going to go up more. But all that stuff is in videos from a long time ago. But I always try to tell people um, to hit me up for DM me. DM whoever makes you feel comfortable. Hit them up for a one-on-one session, because if you really want to know this stuff and learn this stuff, um, it's available, and it's people here that make money every week, every month, right? I'm not a scalper. I don't live on those lower time frames. Whenever I'm talking about a move, it's going to be on a longer range time period. I mean, that's where I make my money. So if you come to me trying to get scalping advice, I'm always going to defer to somebody different. I will tell you what I think and how I view the market, but I will tell you quick, I'm not down there on the 1 hour and 15-minute chart looking for moves. If I'm on the 15-minute chart, I'm looking for an entry for my higher time frame move. You know what I'm saying? So I think all of that goes hand in hand. But I also believe that there a lot of people don't have a plan, and that's they fail already, because if you come to the markets with no plan, even if you know how to trade, you're just going to overtrade, and you're not going to grow, right? Because your plan is everything. You have to have a plan to get from point A to point B. It's kind of like if you go into somebody's house and you've never been there before, you can't just get in your car and drive and find the house. Maybe you can, but it's going to take you a heck of a long time. That's why everybody puts the directions in their phone and they let their phone tell them where to go. It's the same with your trading, right? If I'm trying to go from where I'm at now to $200,000, I have to write it down, and I have to have a plan that get me from point A to point B. First, I need to spend this $350, is $400 to get this 100K account. Now I got to get the account qualified. I know I'm going to be screwed up emotionally, so I need to write down. Okay, this way I'm guaranteed to get 100 pips. This is 1,000 pip candle, bro. So you're going to get a 500 pip pullback. Even if you're bullish and not bearish on JPYs. This pullback, if it goes to the 50%, will be 500 pips. If you can't pass your challenge, a one-step challenge, right? Because I know you're impatient. If you can't pass your one-step challenge on a 500 pip move, you probably don't need to be trading. You're not ready to be trading with money. You should be in a demo, because there is no freaking way that this pulls back and you don't qualify your account. So this month you qualify your account. Now next month you're ready to make the money, because it's going to give you another monthly candle. It might not be this particular pair, but some pair is going to give you a candle that gives you a monthly move. So if you're not profitable, this will fix your problem of being not profitable. It's not going to pay you as much as Andrew makes, but this will pay you a steady, this will give you a steady check. Now, what if you did this, you had 6 funded accounts, 7, 10 funded accounts, if you want to take this route? Now, if you take that route, it's going to be some of them that don't pay you. It's going to be some of them that go down. That's part of the game. But let's just say you get paid on 2 of them. $5,000 a piece. Do you make 10K a month in your job? Maybe you do. Chances are you don't. Is this worth your time? I think it is. If you take that 10K and put it in your personal account, you're going to get paid on that. All I'm trying to tell you is there's a way to fix the profitability problem. I'm not saying this ideal or you'll love this trading style, because it sucks. You trade one time, it's boring. It's one time a month. It's slow, it's boring, but you're going to win. You know what I'm saying? You're going to win. And then you take that win and you sit on your hands and you watch Andrew post his profits in the wrong section. But
can I say something real quick? Yeah.
I'm sorry. Go ahead. I can't hear you, Andrew.
Can I say something real quick?
Yeah. Go ahead.
In the wrong section.
So, one thing, right? Sorry, I'm laughing anyway, but there is one thing I want to put out there. I kept saying it, right? If you know you are not profitable, right? Listen, there is no point to have or to be looking at 20 pairs, 3 pairs. Just, first of all, you have to start from somewhere. Stick to one pair. However strategy you want to be using on that pair, just stick to that strategy. Try that pair for at least for some time, and just understand like what the market is doing. You see, this is USD JPY, right? I marked this area out for some reason, and there is something around this area. This is a fair value gap, 1. This is what? Internal range liquidity. So we have extracted the external range liquidity. We swept the liquidity. You also need to know that we have internal range liquidity here, but there is also a huge probability that we might run this high, like 100%. We might come back and like run the high. Even if we want to sell down, we might run the high first. Why? Because the market is seeking liquidity. This is the thing you have to put on your head, like, okay, the market is seeking liquidity. It doesn't matter where this liquidity is coming from. It could be from the external or from the internal. You just have to understand, okay, now, for example, we are in our point of interest, which is this fair value gap, like the imbalance right here. Is this market going to, probably retrace from here or reverse from here? You have to always, be open. This is just one pair you are trading. Now, you're not looking like 3 pairs or something, because if you're not profitable, there's no need of you looking at 4 or 3 pairs. But with this one pair, you are only focused on this, on your analysis, because now you have like a lot of thought in your head. Okay, let's watch this area. If this market is going to pull back from here, or we might continue going higher to take out the high of this market. But you doing some analysis on this pair and like, okay, waiting for market to retrace from here or something. Then you go to another pair, then you see a different kind of setup. How will you be profitable either ways when you are using the same eye that you used to look at USDJPY? You are using the same eye to look at probably USD card or something. You are just fucking yourself up. Like your brain is like, it's not even working anymore because you are thinking the same thing. You are like what you are looking at in USDJPY, you are using the same eye to look at USD card. It's not possible that way. Start from somewhere, stick to one. Have you not seen, like, let me use this guy for example. What is his name? Oh my God. Oh, I forgot his name anyway. This guy is just trading one pair. If he gets tired of that pair, he just switches to another one. And a lot of people in this industry, this is what they do. It's not because maybe they don't know how to trade or they just because the amount of money you are looking for in 20 pairs or something, that pair can just give it to you. There's no point of you looking at a lot of pairs at the same time. Stick to one pair. By the time you are confident in your analysis and you started making money, then you can like be looking for more opportunities to make more money. But starting like from like not making money or something, then you're looking like thousands of pairs. There is no need for that. Trust me. If you want to like stay long in this game, master the craft, and later you can do whatever you want with it. If you like trade thousands of pairs, nobody cares. But for now, you stop giving back, like giving a market all your money or something without even taking from them. I don't win every trade, but I want to be winning every trade because I also see sometimes my mistake comes from the same thing, like what I'm just explaining right now. I know the pairs are trade. Yeah, it doesn't mean like I cannot lose money from them, but I can still lose money just because I'm playing too much. That is the reason why I'm losing that money. It's not because I didn't know what I was doing or something. I play too much sometimes. I have this skill set, but I'm not taking it so serious. This is one of my things, because I know, yeah, I already have this skill set. I can always like come to the market and just make money and, get out from the market again or something. Just go out and play around or something. I'm not taking this thing serious, even if I know how to trade. But I'm trying to like, get better at that. Like stop this nonsense I'm doing, like playing around or something. I want to make a lot of money from the market instead of me playing around. That's why I'm like, okay, now I think it's time for me to come back to my old ways. Stick to what I know, my pair that I'm trading, then that's it. Like Marcon here is like, he's my very good friend. He always, reach out to me or something. I always tell him, bro, nah, don't bring any pair that I'm not trading. Don't bring it to me. I don't want to do analysis on any pair I'm not trading. I can teach you the same way I'm trading with my own pair. And it works in every other pair out there. So there's no point for me like going from one pair to another. But if you need help with your like maybe analysis or something, yeah, we can do analysis together. I will first of all ask, what are you even seeing in this pair? What are you looking at? What do you think this pair is going to do? For me to even know if you are like, if you really
Andrew,
know.
you say you had to say for a minute.
What?
I said you said you was going to interrupt for a minute.
Yeah, I'm done anyway. You can continue doing your thing.
I was gonna say, Pastor Andrew.
Hey, listen.
He preaching and cussing at the same time.
Yeah, I listen, and I love it, But Andrew, I disagree with everything you just said, and it's nothing wrong with that. I trade setups. I trade a setup, and the setup works on every pair. It's the reason why we put out order blocks. Now, listen. Everything that you said is 100% true. You don't need 100 pair to make a lot of money. I know several traders that just trade one pair. Like I don't know if you guys follow any Hispanic traders, maybe because my girlfriend is Spanish, but there's a dude named Sensei. He only trades EU, right? And he makes a ton of money just trading one pair. me personally, I trade a setup, and my setup works on any pair. So the ICT 2022 mentorship, where you get the order block, the displacement, and the pullback to the displacement, like to the imbalance, and then the market continues, right? I think that there either way is 100% fine. But I think you need to stick to what works for you. We are not all the same, clearly, right? And which is why I appreciate anytime somebody comes to this group and gives out, the free knowledge. I appreciate what you do, Andrew, and what you do, Kim, and people in the past, right? Even if we don't get along personality wise, if your name is an OG, if you're bringing trading success, or valuable information to the group, I'm all for that. And I think that there are tons of ways to be successful, whether you use trend lines on your chart, Kim, or if you just mark up your imbalances and order blocks. None of them none of them is better than the other way. One of them is better for the individual, which is cool, right? I love the way that Andrew explains the way he trades. It's not the same way I explain, or the same way that Kim explains. Somebody is going to benefit from all these different ways. I think the most important thing is nobody will ever become successful trading if they're not disciplined. If you're not a disciplined individual, you'll never find success, because you don't have the discipline to look at the chart and say, I'm not trading that. I'm not taking this trade. Many times I will argue with Andrew about a trade, and I will say, I'm not taking this trade, but this and this and this, right? Every trade is not for you to take, even if you feel like you know where this trade is going. You have to be disciplined enough to say, hey, man, this is a good trade setup. I'm almost 1,000% sure every JPY pair is going to buy this week. I would say, man, it's going to buy, right? There's some liquidity. It might run this high. It's going to buy this week. Maybe GJ or EJ looks a little bit more clear. I would say to a T, man, this is going to buy. It's probably going to buy. That doesn't mean I need to take that trade, especially when I'm looking at this monthly candle and I'm saying it'll buy this week, but it's going to sell for big time the week after. What trade is a better setup for me? The one that's going to give me 200 or the one that's going to give me 400? You have to be able to walk away from trade setups for the better opportunity at a later time. So, listen, I agree with Andrew. If you're a person that just needs to focus on one pair, if that works better for you, that's awesome. If you're a person that's like me that trades setups, and I would rather wait for my setup to present itself. It doesn't matter if it presents itself on gold, the US 30, EJ, GJ. I'm looking for my setup. I'm looking for
how many setups do you get in a week?
I only need one that week, bro.
Okay.
I only need one. I trade one thing most weeks. I might get several entries in what I'm trading. I'm looking for one setup. I'm looking for this order block. This order block represents a break of structure, and I'm looking for the trade back up to there every week. That's the whole point in publishing the order blocks.
You see, I know you agree to what I just said, right? And you are saying right now that you are looking for one setup in a week. So you know how many setup form in a pair during the week? Up to like 3 or 4.
Right.
You have like 10, not you, I'm not talking to you, but somebody has 10 pairs on their chart. They still couldn't even take one trade and make money from it. What is the point of having 10 pairs on your chart?
I agree with that, Andrew.
You yourself, you are only looking for one setup, even with the amount of pair you have on this chart, but just one setup. And a pair can give you at least two setups in a week.
I
What
agree
is the
with that.
point of not profitable or like looking at thousands of pairs? Discipline, man. Discipline. Stay
Discipline.
disciplined.
Discipline.
Patience. This patience is what we don't have. But with one pair, you will always stay disciplined and patient. Because if your setup doesn't form, you are not taking any trade. Now you are hoping, looking for trades with 10 pairs you have on your chart. Taking the wrong trade, then you lose money. Right on time.
Okay. I wanna continue down this road. Whatever style of trading you're doing, or however many trades, all that stuff should be figured out. It should be written down in a trading plan anyway, right? Um, the 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 longer that you're in your journey, you will understand that less is more. The less trades you take, the more money you're going to have. When you first start your trading journey, you probably have that thing flipped the wrong way. You want to take more trades because you think you're going to make more money. That's not how it works. It's not how it ever worked. But eventually you're going to figure out something that works for you. And for me, it was swing trading. And then I kind of discovered the monthly charts and those pullbacks, and then how to recognize those pullbacks. Even when the pullbacks fizz out, they normally fizz out after that 100 pip move. So I figured out if I make my money in that 100 pips, I'm generally fine, right? And now all I had to do was figure out how to grow, my money, and you just kind of keep whittling it down to whatever you need as a trader. But I think the most important piece here is you will never find success if you don't find your discipline. And that's the bottom line. If you're not disciplined, you're not going to be successful. You can't be successful because you'll never be able to walk away from a trade or walk away from the market. I was just trying to give you one profitable way to trade, that monthly pullback, and a easy way to identify when it's going to happen, when it crosses over those moving averages, right? That's the lazy man's way to do it. The easier way to do it for me is look for your chalk, your change of character. Your change of character is always going to happen in your area of interest, right? So you're going to have your area of interest targeted, and normally you're going to have it targeted because it's at an area of support and resistance. It's in a supply zone. It's at an imbalance, a consequent encroachment. However you want to term, what's going on, and in the areas that are key. And once you determine those areas, like once you see, for me, once I see the liquidity get ran, I can hop in the trade. I don't need to see nothing else. Once I see the liquidity get snatched, I can get in that trade with confidence, and I know exactly, hey man, this is going to pay me, especially at the end of the month. So, you just kind of have to figure out what works for you, and then you have to be disciplined enough just to trade that schedule, right? If that requires 2 trades in a month, that's 2 trades in a month. That's very difficult for a lot of people to do, especially when you have your instructor, Andrew, posting his profits in the general chat section. You trying to chase his profits. That's a shout out, Andrew. But if you guys are not struggling and you're doing well, that's awesome. Just keep doing what you're doing. But there are a lot of opportunities coming up, and it's probably this dollar pullback is probably going to be uh, attributed to the election, right? But on the charts, we already see that it's going to happen. So if you're uh, a regular trader, like this is an ICT setup for me. This is a push down. We broke these lows. We traded back up to the imbalance right here. It's going to drop. Like this chart already told me it's going to drop. I don't care if Trump is elected or Kamala is elected. That has nothing to do with this drop. They're going to tell you it has everything to do with the drop, but we already see on the chart what happened. We already see that move down that broke structure. And if you can't see it with your candles, you can see it with your line, bro. Put your line on this low. We broke that internal structure. Now we're running back up. Maybe if you fib this candle, this is going to run up into your zone or whatever. And then we're going to get the drop. So, however you see this, as a trader, it to me, it's crucial because you need to see these things on repeat, right? And yes, this is internal structure, right? This is the actual swing right here. This is the swing because that created the high. But this internal break is enough. You got a lower high, then you get an internal break of structure and a pullback. Now I'm anticipating that we're going to push down. This will be the next area that I look to see how this dollar is going to react. And this is bonds, right? But this is the bond market, the infamous bond market that everybody talks about, right? We cut interest rates, and immediately the market pushed up. And I watched the little CNBC shows, and everybody's like panicking. Oh, why did the reason why the interest rates are going up and they should be going down is because of X, Y, and Z. On the chart already told us that we broke this structure and we needed to retrace. They're not saying that on the news. They giving you a story. They give you some fear stuff, or they tell you 1,000 different lies of why this is going up instead of just telling you, hey, we broke structure. So, if you put 2 and 2 together, this monthly candle will be a bullish candle. And then the next candle is probably going to pull back. If it pulls back a little, like you might be the type of person to be saying, man, it's just going to pull back and keep going higher. It doesn't matter. This pullback is going to be enough to get you paid. And I believe that it's going to pull back and just keep on dropping because the interest rates and whatnot. That makes sense? So, this is not going to drop because Trump got elected. It's not going to drop because Kamala got elected. The chart is already telling you what's going to happen. You just have to wait for it to do it. Any questions? Any questions? Everybody know what they're trading this week?
Simba, I had a question.
Oh, Sade, what are you doing? How you doing?
I'm good. How are you?
Doing great.
Could you repeat what you were saying about how you were talking about a bit about the election and you were saying how it's not going to have an effect on
Okay, this is what I'm saying, show us. Hey, Sade, Spice Girl is in. Hey, Leandra, Sade is in London. I was telling her you was from Nottingham, but anyway, what I was saying is the news is always going to have a story, for what we already see on the chart. Right? So this chart, you got to understand this chart, this push down right here that broke this low, this started on May 1st. On May 1st, it pushed down. This is October. In October, this candle bought up. It's just a retracement of this move right here. Now, right around the election time, this candle is, it'll be in November. The elections is like November 2nd or November 4th, somewhere around there. This candle is going to push down. And the TV is going to tell you that because this president got elected, the value of the dollar dropped. No, that's not why the value of the dollar dropped. The pullback is over. The pullback is over, and it already told you it was dropping on this move down. So what I'm saying is the news is always going to publish a story. But the truth is, we knew the dollar was dropping when we dropped interest rates. In a vacuum, interest rates control the value of your currency. And when you lower the interest rates, you lower the value of your currency. This pullback is just that. It's a pullback. The market does that. The market pushes up. It never pushes straight up. It pushes up and it pulls back. It pushes up more, it pulls back. Then it reached its high and then it pulled back, right? Why did it reach its high? Why can we assume that this is the high? Because they lowered interest rates. Now, just because we haven't broken this low on the monthly chart yet, the price is pulling back towards this low. So we have to take our clues from what's actually going on. Fundamentally, the Federal Reserve Bank is lowering the value of the dollar because nobody can afford to live with the high price of the dollar. The economy struggles, like our jobless claims were going up. Your credit cards are too expensive. The housing mortgages, people are trapped in whatever homes they're trapped in. They can't switch jobs because they can't afford to buy a new house. So the Fed lowered the interest rates, which brings down the value of the dollar. And now all we're doing is waiting for that value to drop. Right now, it's been going straight up. And, the news will tell you whatever story is convenient to be told instead of just looking at the chart. Now, I can teach a 17 or 18-year-old how to read this chart and they won't know anything about what they're talking about, the news. It's the reason why you hear a lot of traders say they don't pay attention to fundamentals. They just look at the chart. Does that answer your question?
Yeah, yes, it does. Thank you.
No problem.
They want to.
Yes, sir.
They pull up a monthly Bitcoin chart. The reason I asked him to pull this chart up is just to kind of further elaborate on what he was just saying about, the dollar going down, the Fed lowering the interest rates. Crypto, Bitcoin in particular, trades the inverse of the dollar. So there's two primary drivers that make markets go up and down. And the first primary driver is going to be liquidity. Liquidity is all things cash and credit that facilitate economic activity. If you know anything about world financial markets, everybody's cutting interest rates. Everybody's doing shit to goose their economies. China's doing it. We're doing it. Europe's doing it. Great Britain's doing it. Everybody in the world is doing it. It's called the economic cycle. So all of these markets are going to go up. And if Kim is a dumb money trader, probably the most vocal dumb money trader in this group. And for all the other dumb money traders, if you look at this Bitcoin chart, you see a big ass cup, coffee cup looking formation, and a handle that's been forming for the last 7 months. So if you know anything about a cup and handle formation, you know this shit is going higher. Go back, pull up a S&P 500 chart, Y2 monthly chart. Okay. If you look at this chart, you'll see that you had your cup and you formed a little handle, and then you got your breakout. The same shit is going to happen to Bitcoin. The same shit. If you pull up Solana, you formed a cup and you're going to have your breakout. All of these markets, if you pull up Tesla, you formed a cup, you're going to have a breakout. All of this shit is going up, and it's going up hard. So some of the cups are a little uglier than others, but they're there. And I see a little cup on Tesla, and we're still forming the bigger cup, the bigger cup will be formed when we get back to all-time highs. So all of this stuff is going up, and it's going up hard. And it's going up because the whole world is lowering interest rates, and the whole world is goosing their economies with liquidity. So this is why me and my brother are bigger fans of zooming the fuck out and looking at longer term charts, because you can see big picture where the train is headed. And if you have a little patience, then you stop chasing the hour to hour moves and you put in a low leverage position and you walk the fuck away and watch the money pile up. You look at all of the tech charts, look at all of these commodity charts. A lot of them have already made big moves. Some of them are running behind others. The stock markets, the traditional markets, front run crypto. They did it last cycle. They're doing it again this cycle. We're going up. So the charts already tell us we're going up. It doesn't fucking matter who gets elected. We're going up. It's Trump, if it's Kamala, if it's one of y'all in this group, if it's your grandmother, we're going up because y'all have great economic policies and shit. We're going up. That politics shit, the shit that they say on the news is just designed to move markets to wherever they need them to move in the near term. This chart right here, the Solana chart, I see a coffee cup and I see a handle. It's going up. The key takeaway here, guys, going up. Pack your bags. We're going up. That's all I got.
Okay, so this is basically a cup and handle. Cup, handle, it got out of Dodge. This is a little bit behind gold. Cup, handle, it's just now starting to get out of Dodge.
Wait, gold is going up, silver is going up to where?
Doesn't matter how high. It's
I can tell you how high it's going up.
Well,
within reason.
I think that I think that's subjective if you put the fib on it.
Well, it yes and no. I mean, if you use the dumb money perspective, they're gonna place a stick on the bottom of that cup, and they're gonna run that stick up to the top of that cup, and then they're gonna move that stick. That's the measured move concept. So at a very minimal basis, on a very minimal basis, you're gonna get the measured move. If you use the Fibonacci tool, it will give you price targets. And as you approach each target, really, if you're trading the proper way, you should be taking some profit.
Like you should be taking profits now in this.
Well, you were breaking off anyway. What were you saying? I said, where is good going? You said you know exactly where good is going. Where?
No, I did not. Hold on, man. Let me talk. I didn't say I know exactly where it's going. I said if you use the measured move concept, you take that stick that he has, that little line, that ray, whatever the fuck it is, you place that thing on the bottom, you run that thing on the bottom of that cup, place it on the bottom of the cup, Watu, but stand it straight up.
Well, you can't stand it straight up because
yes, you can. That's standing it straight up. Now drop it down. You want it to go. You're gonna have to make it smaller. You run it from the bottom of the cup to the top of the cup.
Oh, you mean right here?
Yeah, but make it smaller because now when you have your cup, now you pick that stick up
and put it on your handle.
You put the bottom. No, you put it at the top of the cup on the if you ran an invisible line from one edge of the cup to the other, that represents the top of the cup. You place that stick on top of the cup, and that the top of that line is price is going there. At least it may go higher, but it's at least gonna go there.
But there's a different method too.
Right. This method,
where you run
the move
this
yes,
from here to here.
Then it's going to make the same move again.
Yeah.
Right.
So
right.
That's why I'm saying it doesn't matter because none of it's 100% accurate. But well, it's the truth. But
hold on, there is cup on the chart right now. Go and drink water with it.
Well, listen,
it is 100% accurate.
If you measure this fib move and this pullback, this gives you targets too.
It's going to hit those targets, but as you approach those targets,
I agree. But
if you're doing things the proper way, you will take some profits as you hit those targets. Now, depending on financial conditions, fundamental conditions, it may keep running, but eventually you get to a point where you're maybe at the end of the economic cycle and you're going to hit one of those targets and you're going to get a sell off and now you're in your bear market.
So here's the NVIDIA move.
Right.
All of them aren't going to look like NVIDIA. And some of them will only make it to the negative 27. Others will make it to here. Others will jump off the charts. All we're saying is if we know where we are on the chart, then you can take your profits strategically, right? If you're trading Tesla, and I don't remember how long ago we said getting this thing. I know we talked about Tesla when it was right around here somewhere.
It was lower than that.
Yeah, but my point is this: we put the fib on it, it pulled back to 65%, 70, close to 78%, and now it's running up. This would be the first target level, right? It's probably going to run higher than that. I would probably say it's
going off of that chart.
Okay, that's cool.
I know. I'm just telling your group. Yeah, it's going off of the chart, guys, and you heard it here first. So next year, when it's March or April or whatever, and you still haven't made money, we're giving it to you now.
Yeah. So all these areas you could strategically take a little bit off the table. but however you decide to do it, there is no wrong way to do it when it comes to taking profits, right? And whether
there's a wrong way to do it.
Listen,
when you just don't want to be mean to tell you it's wrong.
If you decide you're trading Solana, right?
Okay, wait. Let's have a discussion, right? About we don't even care about the stocks. We are trading pairs. Let's have a discussion about gold and the indices, right? Because they do the opposite thing of the US dollar, right?
Yeah.
Well, dollars is the time they do.
United States, they are cutting their rates, right? And we just see gold and every other indices there is going higher, right? When is this pullback going to happen? That is the question. We don't care about where they are going or something. Do you really think there will be no pullbacks?
There will be pullbacks.
When, next year?
The most likely points that you will get a pullback is when you hit those fib extension levels.
On gold, we have hit the fib extension, right?
Oh, okay. I mean, can you please put a fib on gold?
Well, gold it looked the same as US 30.
Well, can you just humor me?
Yes.
Just humor me, because I see red candles on gold. So
a fib.
So where are we at on gold?
You got to take
you're at
that blue arrow off.
You're at the negative 62, just above the negative 62.
That's what I'm saying. So when is this pullback going to happen? Because like Ty was explaining about the election, we see.
Is that a wick on gold? Is that a wick?
No, not yet.
Okay, so you will
at the end of the month. You see, at the end of the month, it pulled back. Here's my thing. If you're buying now, you're buying very high. We've talked about gold. I remember us talking about gold down here. So there is going to be an element of risk if you're buying at the top. You're not supposed to buy high. But this is not the first time that we've discussed any of this.
Yeah, I mean, some people were not here, so
if you're not here, you're not buying gold. Wait.
Yeah, I mean, what I would say is, I wouldn't buy gold, unless it had a significant pullback, because to me, we missed the boat on gold. But we just showed you a Bitcoin chart, a Solana chart, a Tesla chart.
This chart is not where gold is.
Right. So you have gold. Gold was a front runner for whatever reason. The S&P, to me, you've missed a lot of the move. I think it's still going to run. I think the NASDAQ is and the US 32, but you have better high probability plays in Bitcoin, in Solana, probably copper. There are I'll call them pairs. They all aren't pairs, but there are pairs that, the cup ain't even formed yet, or the cup is formed and we're still in the handle. So you may have missed the move on gold. Gold is higher risk at this point. Why take gold when you can trade one of those other ones? Because it's all the same pattern. You know it's going up.
So the chart don't lie, right? But for what you see this instrument, they are going higher, like gold and indices, all of this, right? Bitcoin, the cryptocurrencies. But there are some people who are seeing a pullback, like a major pullback on this instrument too, because people see chart differently. That's why we are learning every day. Like, we are here to learn, have a conversation about like what we see in the market. Like you are saying, probably whether the election, whoever wins, we're going to see that whatever flying of this instrument, indices, and like the cryptocurrency.
Well, what I would tell you is the reason I can say that with confidence is because I've done the work. I know what moves markets. I know it's liquidity. I know that when the whole world is 100% in debt, It's like if you live in your house and you got a job and you lose your job, but you got a credit card, okay, and your credit card has room on it, then you're going to live off that credit card because you don't have income coming in. And then you get to a point where you max out your credit card. So your credit card is now, you're now 100% in debt to GDP inside of your house. And let's say you can't get a job. So you can't begin to you can't begin to pay that debt down. So if I show up and I say, hey, man, I'll give you an extension on your credit card so you can continue to live, then you're going to take it. That's the same position that the whole world is in. So liquidity, balance sheet capacity, room on your credit card is what drives this shit. That's why they loosen and allow financial activity at every 4 years. And if you go back in the charts, you will see it. So the other tool that they use is interest rates. Why are we lowering interest rates? Because we want to encourage and promote financial activity, economic activity. We can't do that with high-ass interest rates. So it's a predictable, easy-ass cycle. That's why all of those charts look the same. So if you don't have the conviction, though, because you haven't done the work, then yes, you are going to have some questions. You are going to believe the bullshit that CNBC tells you about. If Kamala wins, the shit is going down. If Trump wins, it's going up. The charts are telling you it's going up. It doesn't fucking matter because they don't matter, because the country is in debt. The whole world is. And everybody is promoting financial activity. And the reason they're doing it is because you got to make payments on that debt. But do you want to make the payment at 10% interest or 1% interest? They want to make the payment at a lower interest rate. That's why they're lowering the interest rate. They're lowering the interest rate, number one, because they got to make them debt payments. And number two, they got to lower them because at least in the United States, everybody's small business, they got to borrow to run them businesses. So they need tax receipts. They need income, the same way you need a job in your house. So if they keep everything choked off and nobody's working, there's no tax receipts coming in. We can't pay the debt. That's why all the charts look that way. It's all going up. All of it. Rising tides are going to lift all boats. Even that shitty one that you might be in. It's going higher, man. Not just the yachts. The yachts might run harder, but everybody's shitty boat is rising in this environment. We don't live in a CapEx environment. We used to 35 years ago. We no longer live in that world. We're in debt. Everything runs on credit. Balance sheet capacity trumps interest rates now. And until something changes, this will be what it is.
Which is why it's so important to understand that financial cycle, the economic cycle. Does everybody understand the economic cycle? Yay, nay.
In what aspect?
Huh?
And what aspect exactly?
Well, the aspect when it comes to the interest rates, there's a cycle that happens in every country. Every country has the same cycle. If you understand the economic cycle, you can always grow your money. Let me just explain it, because I don't want people to feel like they're less than, because or be too embarrassed to to ask a question. And this is very important because we all live in the same world and we all depend on the same thing. So if you all these charts are the same thing, right? They're going to explain to you the economic cycle. And if you understand the cycle, then you understand where to put your money to make it grow, right? Let's talk about where we are right now over here, right? The falling interest rate. We just, if y'all listen to Fed Chairman Powell at his last speech, really 2 speeches ago, when he was at Jackson Hole, Wyoming, he said, it is now time to shift our policy, right? So every central bank has monetary policy. We're either in a restrictive policy environment or we're in a non-restrictive or relaxed policy environment. A relaxed policy environment calls for lower interest rates. They encourage, like my brother was saying, they encourage financial activity. They encourage people to borrow money, to spend money, this is the gas for your economy, for your local economy. So they want to make borrowing money cheap so that everybody goes out and borrows money. When money is cheap, you don't mind spending that money on your credit card to take that young lady out to eat or to buy that new vehicle or to buy a home. You're buying on credit. You're spending a little bit more than you have. I know you are because you live in the West. In the West, they commercialize spending. My brother used to I'm sorry, go ahead.
Oh no, I was just piecing together. So that's like when your brother just said how the government needs those tax receipts or whatever so they can have the proof of spending or whatnot. I'll pick up what you put down now. Thank you.
Yeah. So the government is a totally different entity, but the people are doing the same thing. The government is doing the same thing the people are doing, right? And the government has to make payments on its debt the same way we have to make payments on our debt, except the government doesn't have to make payments every month. They're going to make their payment once a year, right? And the thing is, their payments are going to be like very, very high when the interest rates are higher. So at some point, and I don't know if you've ever heard them saying, they're saying, hey, man, the government, the interest on our debt is over $1 trillion now because the debt gets so thick. So now when you lower the interest rates, the government can go refinance its debt the same way you would refinance your payment for a car, your payment for a home. So all these governments refinance when the interest rates are low, not when they're high. They're not refinancing for a 7% interest rate. They're refinancing for when the interest rates are at zero or the closer to zero that it gets. When the interest rates are falling, right? And when everybody starts spending, man, why do they have this thing right here? Okay, here we go. When everybody starts spending, the economy heats up. And you get rising. I don't know why they have recession over here. This recession shouldn't be. Recession shouldn't be here. But you fall, interest rate starts falling, and the reason why you have the recession is because the interest rates were high for too long, and it wasn't enough economic activity. But once the interest rates start falling, people start spending, right? And then when people start spending, the affluent people, the people who understand these finances, they buy stocks, right? They put their money, this free money that they're getting, they put them in the stock market because they understand that the stock market is going to take off the same way it did, all year. The stock market is going to take off because people have access to this money. Most of us get this money and we go buy Jordans, we go on vacations, we buy things, trinkets. The affluent people, they take that money and they buy stocks, they buy Bitcoin, they buy assets, homes, not cars, homes, things that appreciate. And then the economy takes up, right? And everything is going up, to include the stock market, at a record pace. We make a new record highs. Well, they've been making that money all year. And once the market gets to the peak, Jerome Powell comes back out and say, hey, man, we got to raise these interest rates. And everybody say, raise interest rates. Man, I got to go take my profit now. I got to take my money out of the stock market. I got to take my money out of these Bitcoin. I got to take my profit. I got to take my money away from things that were doing good when we had a weak financial, when we had a what do they call it, Sean? Less environment, a less restrictive policy, because they're making the policy more restrictive. And this is a picture here, but we can look at the actual market, because we all were here and we all understand that during the pandemic, the interest rates was at zero and the market went straight up. And it went up and it went up. And then at the end of the year in February, at the end of the year in 2021, them yahoos talking about we got to raise the interest rates.
But hold on. He mentioned that the interest rates got dropped to zero around March 2020. But what else big happened around March 2020? That's when they printed all that money and gave it to everybody.
The stimulus checks that y'all was getting, I wasn't getting no stimulus checks, but y'all was getting them.
Right. But the point is, I made the point earlier to tell everybody that liquidity drives these markets first. That was a form of liquidity. And you see what happened on the markets. Now, when you get to the top of the market and they talked about raising interest rates, and I guess they did raise them for a while, you see the market fall. But the other thing that they were doing in the background is they were sucking the liquidity out of the markets also.
When the Fed was balancing his books.
So, and then when you get to the bottom of the market, and I think the S&P is a better illustration, but the point is, if you use that Fibonacci and you go from, I would say, I don't know, October-ish of 2020, if you anchor the fib around there, around that little consolidation around there, December, around
this
there.
Is October.
Okay. Yeah. If you anchor your Fibonacci there and you stretch it to the top of that last bull market.
Oh, you want me to do it?
Yeah. Look at the pullback, guys. Isn't it interesting? Is it a coincidence? And then look where the market has gone. You hit your negative 27. You're approaching.
You pull back.
Right. Somebody was asking about, how do you know when are you going to get a reaction?
Then you hit this and you pull back.
Right. So this is the power of these tools, but y'all have to get off of the 15-minute chart, the 5-minute chart. It's fine to go do your thing down there, but you know where the train is headed if you zoom out. And if you halfway know what's going on, fundamentally, I know most motherfuckers in here don't care about fundamentals, but, if you know what's going on, in the business cycle, you kind of know where you are in the business cycle, then certain things will make sense. You might hear certain negative things and you just see through it. You look at it as noise, like the presidential election. Who gives a fuck? Doesn't matter. Whoever wins, it's going up. How do I know? Because I look at the whole chart. I know the business cycle. I know there's a $35 trillion debt. I know they don't want to pay that debt at a high interest rate. I know interest rates will continue to come down. I know they will continue to push liquidity into the system. So I know that from a fundamental standpoint, it should go up. Then when I look at a chart and I see a cup and handle, I know it's going up. But I don't know who the president is yet. It's just like around March of 2023, I think it was, we had a couple of bank failures. Everybody was scared as shit. I knew it was going up because I knew they were going to bail out the banks. How did I know they were going to bail out the banks? Because I know that they can't afford for the banks to fail because they need everybody to have confidence in the system. So, but if they're going to bail out the banks, that has to be liquidity pushed in because I know they don't have a vault somewhere, with gold bullion, reserved to bail out banks with. They're going to print the money. When they give money to Israel, when they give money to Ukraine, when they do all of these things, I know there's not a special fund earmarked war chest. Hey, go to the war chest and send Israel their shit. Hey, go to the war chest and send Ukraine their shit. No, they're printing it. Where does it come from? Out of thin air. It's liquidity. It's going up. That to me is the importance of understanding the fundamental side of things. When I hear certain terms like raising interest rates, we're not doing this, we're not doing that, then I know I got to sell my shit. It's probably going to go down because they're sucking liquidity out of the system and they're raising interest rates.
And this is the thing, they're always going to tell you before they do. They're never, ever going to not telegraph it. That's the crazy part. Like we was hearing about interest rates being raised coming out of that pandemic for 2 or 3 months.
Yeah, I think they was talking about in October and November.
There you go.
2021. And then if you look at the chart, I believe January you get your first big red candle.
Yeah.
So this is US 30, right? What is the Dixie and the 10 years bond is showing?
What is what? Dixie?
Dixie, dollar a day.
What is he saying on the chart?
It's probably going to say the opposite of this, is my guess.
This is June. Okay, November 2020, when they was talking about raising interest rates, you get your bump up. Right? So this is Monday, or this is January. You get your bump up, you get your pullback, and then you get your run. That's crazy.
Yeah. And
Man, that's crazy.
And that's the power of knowing the fundamental side. You know, certain things are supposed to happen. It may not happen kind of on our own, what we perceive to be the correct timeline, kind of like what's going on with that dollar, I think right now, or those bonds, like, oh my God, why are they going up? Why are they going up? I mean, they're gonna go down.
Yeah, they're going up because they got to retrace.
Yeah, but I did some. Can you hear me?
Yeah, I can hear you.
Yeah, I did some back testing on US 30 at the start of the year. Because
let me stop you right there.
Anyway, no, no, my mom's here, so please no cursing.
Hey, I'm probably older than your mama, so hey, me and your mama is peers, so you don't curse.
She's not a boomer.
You don't. I'm not a boomer either.
Oh my dear. Anyway,
you don't curse.
Anyway,
don't,
my dear.
Go ahead.
You said how to deal with Leandro?
Pardon?
Go ahead, Leandro.
No, I was doing some back testing on US 30 to see the alignment because in October, November, that's when the clocks go back
Obviously.
And then in March, that's when the clocks go forward. And if you look at US 30, that's when the run started in when the clocks went back, and then it ended when the clocks went forward. And it happened year after year.
And what is your point?
Is that around this time, that's when the run starts because the clocks go back. So I'm just, if you look
I
at,
think there are some general times when the market does things like March is not normally a good year. The summer is not normally good for the indices. It's more choppy. But yeah, we all, I think we talked about it last month. In October, we expect the market to run. They're going to tell you it's because the president. We see right here when these bonds break south, the market is going to break north. Like all of us should understand that. I think we've all beat this into the ground this year, especially the last few months.
Yeah, because it's a huge change in direction. It's not just a simple pullback. That's what I'm trying to say. Like during when the clocks go back, it's a huge change in direction.
I think y'all always.
That's what happened with the JPYs as well. If you look at
I know, but I think
that's when the run started.
But I think you understand that I've said if you get you a small position in those indices and hold it, that's exactly why I said it. This is going to happen. It's not like if it's going to happen. It is going to happen. This is why I've said it for months now. Instead of you trying to time it, perfect, just get you a little position. And every time it pulls back, you add to it. We know where it's going. And that's exactly why I said, too, I'm not trading the JPYs this week when I can sell them next week.
Yeah.
That's the move. 1,000 pips at least. You know what I'm saying? But if you don't believe this stuff, I'm not trying to convince anybody in the group. I'm telling you what I know and what I see. I'm not trying to convince everybody to see it that way. You might not listen. This cycle might not be for you. You might be new to your journey. You might be like I was in 2020. And that's cool. Because guess what? We got another cycle after this one. You might get your money on that cycle. But I just try to share things that we've learned along the way. Right? We've traded a war, we've traded a pandemic, we've traded low interest rates, we've traded high interest rates, higher for longer. We've done all that. I'm just giving you the play before it happens. Whether you believe it or not, hey, man, I look, all I can do is bring that horse to the water. Yeah, you stick your head in your drink or you don't. And that's cool either way.
Yeah, we are here to learn, bro. Everybody's learning, so which is nice, But for me, run or no run, the market will always give you opportunity to get in, right? So I don't really care about this interest rate is being, cutting down or something. Whatever is going to happen is going to happen in the market. So for what I see, Dixie is still bullish. 10 years bond is still bullish. So if you like, gold runs to 50,000. I don't care. That thing, what is going to happen is going to happen. So this one like market cycle or whatever, it's just bullshit for me, man. Whether election or no election, trust me. The chart is telling you what is going on right now. If we're going to pull back here, we will pull back and what? Continue buying or selling what? It's always going to present itself. This government of a team, election, market cycle, all bullshit. So you want to tell me before that market cycle, there was no setup that is telling you that this thing is going to run higher? Is it because there is the market cycle? No, it was because
I think if you're a successful trader, you got to do you got to keep doing what you've been doing. As far as
the candlestick is concerned, I'm like, that is what I'm interested in. I don't care about what they're saying.
Look, what I would tell you is if you're a successful trader and you've been successful, keep doing what you're doing. Again, if you choose to not believe that the world runs on economic cycles and so on and so forth, I mean, I'm not the guy that's going to sit here and argue with you. I mean, that you're a grown man, that's your prerogative, but I'm here to tell you it does. I'm here to tell you if you Google cup and handle formation, Google it and read it to the group. I mean, I didn't make this shit up.
All of these patterns, right? That is how, like, that's when I mean, that is how we started trading. When we get into like forex or whatever, this market space, right? Financial market space, we started with all of these chart patterns, head and shoulder, cup, handle, whatever it's called, We all started that way, But then what happened? Were you making money from the market when you were like learning these chart patterns and all of this? No.
Well, but hold on, Drew.
Ty, wait. You go back to the monthly time frame. Let me show you something. You are like preaching liquidity every fucking time we are in this chart, right?
I agree.
So from this chart, what can you see right now from this chart? Let me just circle this thing. What can you see right now? Because you are the one preaching liquidity every day. I'm not against anything, like, I'm just like telling you what from like my experience. I'm making money from this market every fucking day, every fucking time. From my experience, what I'm seeing in this chart, I know what this market is doing. Well, because I'm reading the candlestick. I don't just look at the structure. I read the candlestick himself.
That's great that you're reading the candlestick, but I mean, maybe you're a little bit more advanced than the majority of the people in the group. The point that I'm making is if you can read candlesticks, read them. If you can't read candlesticks, if you're not so good, I'm telling you from a big picture standpoint, those asset classes that I pointed out are going higher.
And I agree. I'm not against it. Trust me, bro.
And hold on, y'all. Here to a more important point. Everybody is not going to be a technical trader. That's just not going to happen, right? Some people will be able to read candlesticks, but 90% of the people will never get to there. Some people will want to know everything about imbalances. Other people won't. Some people will trade zone to zone. Some people will never get there. Some people want to know, hey, man, can I just stick my little money and get my 8% this year to beat inflation? Can I put my money here to make my percent? There's something for everybody, right? And before you're ever a good trader, you will always be a better investor because it doesn't require you to get in and out. You can just put your money in it and you can show up 8 months, 9 months later and collect your revenue and you can make a lot of money. Mm-hmm. This is what happens when you understand the economic cycle. This is why it's important. And this is why we are talking about it, because before anybody can make money trading, you will always be able to make more money investing. And if you understand where to put your money based on this cycle, you will make returns. Now, as a trader, you can make more returns because you're skilled in pulling your money and putting your money in trades. But everybody is not a trader at this point. Some people are better served investing until you learn enough to be a good trader. So this is why it's important to know, hey, when Fed Powell says we're lowering interest rates, that's when it's time to put your money in the markets. And hey, whenever Fed Powell says we're raising interest rates, you get your money out of the S&P fund or the index funds because they're not going to perform well.
Mm-hmm. So I'm not cutting you off, right? So what I'm trying to say right here is we know these markets are going higher and they have been going higher either ways, right? We haven't had that pullback that we are waiting for. We have been waiting for that pullback. We haven't had that pullback. And we are okay, at this market cycle right now, at this point of the time,
Hey, man. Hey, just real quick. You keep talking about the pullback. I mean, what do you mean? I mean, are you expecting a big pullback? I mean, when you keep talking about the pullback, I mean, what are you talking about? Can you elaborate on that a
The
bit?
pullbacks, I mean, right, is at least if we have like a very big swing, we have to pull back at least, let's say 30% or 50% before we continue that move, right? Has US 30 done that?
I don't think you're gonna get no. Are you talking about in the index fund? Or, I mean, in the indice?
Yeah, I'm just talking about generally, So this is the Monday time frame. Where did we started? Like 1, 2, 3, 4, 5, 6. And this is what? This red candle right here was when?
Which, oh, you talking about this one?
Yeah. When
This was
that?
around April. We knew we was getting this pullback.
So what happened this time? April.
Well, this is every year it pulls, but I don't remember exactly what it was, but I remember us talking about it, and we were hoping that it would pull all the way back down, and it did. Kim, do you remember what it was? As a matter of fact, I took a picture because Cramer, I was watching Cramer one day, and you remember that, Sean?
Yeah, I remember.
He put the cycle. So I put the picture. We spoke about it. We got the pullback. It pulled back to this level, but it didn't pull all the way back. This is not a 50% pullback, but this is the pullback.
Mm-hmm. So,
but,
you're not gonna get that pullback on that level.
It might not happen, but there is still a pullback in this market, one way or the other. It's going to happen.
Well,
some would say this is
it ain't gonna happen in this fourth quarter.
So, okay, let's go back to the US 10 years bond again. Go back to the 10 years bond. Let me show you something there. So right here in this area, right, there is something that occur right here. If you look at this move upward, right, then we pull back this red candle right here.
Which candle?
I mean, these two red candles that pull back, there were nothing like liquidity around this area so much. You see, we move higher. Now we came back down to run this low. So even if, because you want what? This market to keep selling off, right? For gold or every other instrument to keep flying higher, like the indices and the cryptocurrency. Even if that thing will occur, I probably want to see this high get run, wicked out, then continue selling, probably this year or next year, before all those things will occur. That's why I'm saying, why is US dollar, the Dixie, like very strong right now? Why when they are cutting interest rates? Why?
Because of this pullback.
It's because of the bond.
I'll tell you what, next month it won't be strong.
But and I'm not trying to be a dick here, but that question that you asked, is, to me, in my opinion, why you have to have, or why it's nice to have, an understanding of the fundamentals. Because if the bond yields are going to be high, then the Dixie, right? So that's why, and just to me, as I interpret it, and I'm by no means trying to act
bro, sorry. What does the fundamental tells you about this move right now? About the
fundamentals tell me about it.
Yeah,
this is dropping lower.
Yeah, that's what they tell me. I mean, but if you're asking me,
what does it tells you?
If you're asking me to explain every dip and every pullback, I can't do that. All I know is there are, from a technical standpoint.
I disagree. The fundamentals tell you that the dollar is going to drop.
Well,
right, but not now.
From a larger time.
No. The technicals tell you when to enter the trade, but you're anticipating the dollar dropping.
Bro, even like 1-year-old baby know what the dollar is going to do because we are cutting interest rate. We want dollar to be weak, right? But I'm just saying, we watch the news. We know what they are doing. So dollar is going to get weak, but not just now. So if dollar is getting stronger, Why not gold pulling back, US 30 pulling back? That's what I'm asking. So do you really think the market cycle is really
I explained to you
or what?
I explained to you a while ago why they're not getting why they're going up.
Yeah,
but you don't believe it.
But listen,
let me repeat it just one more time. Liquidity drives the markets first. That's the number one driver ahead of interest rates. If we print money and inject it into the system, will rise, even the shitty ones.
I know, but
that's why gold has exploded.
But you're not really explaining it.
I am explaining it.
I know, but liquidity means when China prints money,
I explain that.
But
I said all things cash and credit that promote economic activity.
I know, but I think
I explained how we printed money during the pandemic. I mean, I explained how we print money and give to the war efforts. I mean,
bro, I get it, but all those examples are United States examples.
All the whole world does it.
There you go.
The whole world is print money.
And the whole world participates.
Have the Fed printed the money yet? That's what I'm asking.
What are you asking?
Did.
Have they printed the money yet?
China did.
Yes, they've printed money.
When?
Have we given money to Ukraine, sir?
Israel?
Have we given money to Israel? Did we bail out those banks in March of 2023? Signature Bank and the other West Coast bank? Some bank in New York failed? Has anybody lost money? Was everybody made whole?
And China just dumped a whole bunch of money?
Right. They trying to rescue their economy.
It all finds its way to the U.S. markets.
So again, and I'm not trying to yell at you, but again, the point that I'm making is when you understand these fundamentals, then you understand liquidity. And if you go back on the chart, please pull up the S&P 500 because I think it illustrates it best. I want you to go look at the last bear market low, which occurred between October 2022 and December 2022. And I just told you we bailed out banks at around March of 2023. Look at the market. In liquidity, when did we get our first interest rate cut? It wasn't in March of 2023. It wasn't in between October and December of 2022. Why is the market going up? Well before the interest rate cuts. Why? Please explain it to me. It's because of the liquidity. Liquidity drives it higher. Liquidity will lift all boats. And it's right there in front of your face. You can choose to ignore it, or you can get on the train and ride it to the top.
We're going to win this race.
All right, let's go on. Continue. Let's check the what we are trading next week anyway. So
what do y'all trade? Does everybody know what they trade?
About this liquidity and interest rates of it.
It's 100% facts that anytime there's liquidity injected, it's going to find its way to the U.S. markets. I mean, if you're great trading, you don't necessarily have to know that. But if you're struggling, these are great things to understand. It's great to know that when the central bank says we're lowering interest rates, you can make a bag in the market. And it's great to know that when we're raising interest rates, you can buy dollar products. It's all that is helpful to a new person coming into the market. Because now I know that the US dollar is going to be rising. I can look for buys in GU and EU.
So wait, hold on tight. Let me say something real quick. Because now look at it this way. What do you think the JPY is going to do?
This coming week?
I don't care about the coming weeks. Like, from now on.
Well, I'm looking for the JPYs to sell, Brent.
Okay, so you want the indices to keep buying, right? Gold and all of this. Then you want JPYs to sell. Why? Don't you think the Chinese, like the Japanese people, they're going to take their money out and put it back to the US market? Why do you want the JPY to keep buying and selling, I mean?
Well, one reason I think that they might sell, at least in the very near term, is because Israel and Iran popped off, last night or whenever it was. Our markets.
Todd, what is the JPY index doing? I mean, that's
because I just want to get clarity about this market. We said US 30 is bullish. This is
pulling back, and it's going.
What about the Japanese?
Either y'all believe it,
sir.
This is a push-up.
Sir, what happened on the war front yesterday?
What happened? Like
did Israel and Iran wasn't they firing missiles or doing some shit? Like I believe as recently as last night.
Yeah, it's last night. Yeah, I got like a notification.
So our markets were closed, right? Were the trading markets closed when that happened? I believe they were. So my guess, sir, is that when those markets open, the JPYs, people will run to them JPYs probably. Because they're going to be afraid and shit. Ain't that usually how it works?
This is what I expect right here from the Japanese yen index. But I don't personally need to look at that index. I can look at the JPY pairs and tell you that they're selling. The sell is the move. Like all of them retraced for a reason. Either you believe it or you don't, and you trade it or you don't. But the opportunity will be there for the true believers, Dr. Jones. There was a move down, there was a pullback, and this would be the next thing to get violated for me, right? We violated this low. Now this pulling back. Once we close the imbalance, it'll be ready to sell. Whether it breaks this low remains to be seen. But I can say that if we're selling from here, we sell from the 65 to back to the lows, that's 1,457 pips. It's a little bit more than I have now. You know what I'm saying? I can work with that. So, it's neither here nor there. You just trade what you see, and on the higher time frame for me, I believe we're going to sell. If you don't see that, then you don't see it, and it is what it is. Eventually, what I think is going to happen, everybody will eventually see it. When we start to push down. And whether that happens next week, like I think it'll happen, or if it happens in 2 months, right? Just because I think something is going to happen, if it doesn't show on the charts, I don't enter the trade. But, whenever we got the 2-month bearish order block, I said, man, this is going to buy back up. It pushed down further. It grabbed the liquidity. Now it's buying back up.
But even with that, because, I don't look at the 2-month, but if you go back to, I think you were just on the weekly or the monthly or something like that. And I don't do the fundamentals, but I agree with Todd because was it the monthly? I think it was the monthly because, no, it wasn't a monthly. Where were you just on?
I thought I was on the
one before that. 2E. Oh, okay, that was it. Y'all know I'm strictly market structure and price action. And price action is coming back to that violated bullish order block that got violated. Yes. And that's where price should pull back, start pulling back to either continue going up or keep selling down. But market structure and price action. That's all I can say. I can't stress that enough from my end. I hear what Sean's saying. I hear what Todd say about fundamentals.
We have to take
but
out
it's just
problem. It's all right.
What?
We have to take out this high first. It doesn't matter if we are selling or buying.
What I'm saying is I don't even care about all that. What I'm saying is it's in a POI. And then once it's in your POI and you go down to smaller time frames, the 4 hour to 1 hour, and you start seeing the internal brace of structure or a change of character or whatever you want to call it, then that's when you know it's time to start trading. What I'm seeing with people is people just aren't patient enough. That's all I see. People aren't patient. I can wait 2 weeks. I can wait a whole month before I get in a trade. But people are not patient enough to wait for the move, to wait for the market to show you what it's going to do. And then you wait for the move, wait for the pullback to get into the move. That's what I'm saying.
Well, I think Kim is right about the patience, and the whole point about the fundamentals, at least as far as I'm concerned, is if you're not a great trader, if you're not a great candlestick reader, a great person that interprets market structure, if you're not greedy, you just put your position in at a lower leverage point, and it might run against you for a week or two, or maybe even a month, but you're in the right move. And if you're under leveraged, because you've got 1 million pips or points that the trade is going to travel, because you know the overall direction of the market, at the end of the day, you're going to make money. You have to treat it more like an investment than a trade. If you're great at trading, then you probably really don't need the fundamentals.
No, I agree, because had I known even a little bit of fundamentals that I know, that Todd has taught, that you have taught in 2020, and I knew that when COVID happened, that the indices was going to go, I would have been in the indices a long time, 4 years ago.
Right.
So yeah. I agree with that.
I think that if you understand the fundamentals, then you can wait for the chart to verify what you're thinking. It either verifies it or it doesn't. But if I'm looking for something to sell and it buys, I don't have a trade, and I'm cool with that. But if I'm looking for something to sell and then it goes to my POI and gives me a chalk, then I'm in there. And to me, that's what made my trades very solid, and it's why I love that monthly candle, because we can argue about the direction, right? But once it turns around and it crosses over that moving average, you can't tell me nothing. You know what I'm saying? Like, I don't have to agree that this is a bullish move all the way to the top. But once we pull back and we cross over this moving average, I know it's going to be bullish into my zone. This rolled right to the zone. So that's all I'm trying to say, as to help other people who might not have it figured out. This might still be a little bit hard for people. But, if you wait for this 18-hour chart and the price crosses over, you get this pullback. But if you put your stop loss where you were supposed to, this pullback doesn't take you out. And price runs right to the zone. And you could have taken your profit right here. Whether you believe it's going to keep going or turn around, if you would have took this trade back up to the top, you'd have made 1,000 pips, 1,100 pips. And now you're chilling until you figure it out. Now you might be like, well, Todd said it's going to sell and Andrew said it's going to buy. Well, we ain't got to do nothing until it does something. It can bounce around in here for 2 months. This is why I personally love to trade more than one pair, because while this is deciding, I'm still trading my setup in a different pair. And I think we kind of looked at it in EU last week, because EU got here this month, and it took a month to get ready to sell, right? It got to the POI August 25th. It pushed down, gave you the chalk and pulled back, took the liquidity a month later, and then it started selling. In my opinion, we're getting ready to buy. We took liquidity from this low. There's still some imbalance, but to me, this is looking a lot like a chalk to start pushing up. But the great thing about it is I don't have to make any decision at this point. I can just wait. And we're at a point to where at the end of the month, I already know I'm going to get a pullback for this monthly move. At least that's how I trade. So I can wait until next week and be sure to catch this move. I only have to catch 100 pips. So I can fib this down candle, get my zone, and it's going to be more than 100 pips to the golden zone. But we have this, we have GN, we have EJ, we got UJ. It's an ample opportunity is all I was saying. That's what I was saying when I started off. And I get it. This is probably not the way that most of you guys trade, but this is a very easy or a simple, I'm not going to say easy. It's a simple way to collect a monthly paycheck. It's very simple.
Thank you, sir.
Yes, sir. Do I have any other questions or comments? Does everybody know what they're trading? I like these spirited conversations, guys. I mean, clearly Andrew knows what he's doing. And there's no right or wrong way to do things. It's either you're making money or you're not. I just want everybody to understand that there's different ways we can approach the market. And I know in 2020, I wasn't good enough to trade lower time frames. The higher time frame moves are the easiest ones because the candles take a longer time period to form.
Drop your pair. Let's take a look at it before we go.
Everybody know what they trade.
Can you check GA? That's what I'm trading. So
1 month candle.
Oh yeah, Ty was saying we are not going higher anymore.
This is where I think if we push up this week, this will be my target. I would look for a wick, or it might not. This was a 78 line, I think, from a 2 week.
So what do you think about this pair, bro? What do you think we're going to do next?
Right, you already know that. To me, this is the target. If you sell anywhere from up here, this will be my target.
Okay.
And I'm basing this off this monthly candle. Now, this is my target, but even if you didn't agree with my target, if you take this and you get a pullback, if I fib this candle, granted, we can't fib it yet, guys, because the month ain't over. But if this is the high, even if it pushes a little higher, you just fib the candle, and this would be the pullback area. So you would wait for this candle to start pushing down and cross over your moving average. If it went from right here just to the pullback area, that's 250 pips. You can get your monthly salary off of this move, and you can get out. You can say, well, I'll let Tide hold it to keep going down. I'm getting out when it pulled back to the 50. That's 250 pips.
So GA is doing something like this and taking out this high this week.
This, you said it'll go for this high this week, right? Wick.
Yeah. So from there, then of course probably the whole week, because AED is very strong and British pounds is neutral.
So that'd be 320 pips. That's even more pips.
I'm not saying we come here right now, It's just going to come around somewhere around this area, then take out the high before we will see a pullback or something. But I know we are taking out this major high, this candlestick.
Eventually it will take out the high.
But you didn't agree with me before. You said, no, we are selling. I mean, this is going to sell, but for now, we are taking the pips higher first.
We won't touch that high. This high will be in place. You'll be able to collect this 300 pips before you ever think about that high.
Whatever happens, I'm cool with it, Like I say, I don't have any problem with somebody like say, oh yeah, this is what is bad. But I just read what the candlesticks are telling me. That's just the most important thing to me.
I agree. And this pullback is in order. Even this candle, look at this candle. See this big long candle?
Mm-hmm.
If you put a Fibonacci on this long candle, even that pullback, it happened after it took out this high, but it still pulled back. It still pulled back.
Because liquidity, internal range liquidity, bro.
I agree. The same way this candle is going to pull back. That's why I'm not trying to change the way anybody trades. I'm just giving you, this is a give me on how you can make money every month. Just trading the pullback of the candles that have went a great distance.
Look at your, what is it called? Moving average.
500 pips. My moving averages are right here.
Yeah, but like you say you buy, right? When it's above the moving average.
Yes, like yes, indeed.
Okay. And are you looking at this chart like we are coming down soon right now or something from your moving average perspective?
I am telling you that next week, when this new candle opens, we're coming down.
All right.
Look, you see how this candle right here is above the moving average?
Mm-hmm.
We still come down.
Mm-hmm.
This price still came down.
But during this time, it wasn't like that, though,
We're above the moving average here. This took the liquidity. It still came down.
Mm-hmm.
This is available to you every month, not just next month, every month. And when you get these little small candles, you don't want to trade this particular pair. You want to trade another pair that you've actually made a move. This thing moved 500 pips last month. It's going to pull back.
What is he arguing? I don't understand the basis of the argument. I mean, we're
not arguing, bro. I'm just saying, right?
Oh, well, I don't mean arguing as in like in a mean way. I mean, what are y'all debating? I mean, I don't understand.
I'm saying, right? We are going to take out this high. Like I said it before, but Ty didn't agree with me. You know, he said like we're going to keep selling, you know. I said this is like a point. But now, probably next week, this new week, we're going to run this high first. But before we run
the high or the bigger high, the higher high.
We might wick. We'll wick this high, maybe. Maybe we'll wick this high. We're not touching this high.
Not now. And we are not selling down to
this. Listen, eventually we will. All I'm saying is if I'm looking at this chart, this low got ran, this is a pullback. Maybe we take this liquidity. After we take that liquidity, though, we going lower. We're going lower than this low. That's what I would trade this like. I would trade it like this is the next target, and I would want to trade to this imbalance. Maybe this low. To me, these two lows will get ran before that high gets ran. There's nothing in this chart that has changed my mind about any of that. And if we wick this high, hell, to me, that's double confirmation that we're taking out this low. Because that's just a grab of liquidity. If we get a candle close above that high, then I would just think, well, maybe we're pulling back and we're going to go higher. Does that make sense?
Amen.
And listen, I might be wrong, at the end of the day. But I'm telling you how I would trade this. And periodically, I do trade it. I trade it down, though, versus trading it up. That makes sense?
Mm-hmm.
But, the thing about me is I don't have to be right. But I believe what this chart shows me. And by us taking that low out, I believe we're going lower. But we shall see. This week, maybe we get a pullback. Maybe we go up. Maybe we wick that high. If we wick that high.
Did we close below this low?
I can't hear you.
Right? Did we close below this low? There was a low right here before that formed. Did we close below it?
Did we? Did we close below it? Sir?
Okay. It looks like that in the candlestick. Did we do that? Oh no. I'm just asking.
It's subjective because if you're asking me if we got a body close below every one of these wicks, the answer is no. But we sure did get body closes below the body closes over here.
And the same thing occurred right here. We did have a body closure above.
I agree. That was before, this closing above was before we ran the low.
Right. And what was the low again?
Right here.
Yeah. Look at it very well. What is that? Is it like equal lows or what?
Yeah, it's equal lows. Relative equal lows.
And is that liquidity or something else?
Well, yeah, but listen, this would be the same thing too. If we went past that high, this is relative equal highs. If there's a wick that goes past there and we close back below here, you're not going to see it on this line chart, but liquidity got ran again. The liquidity on the top of this was just a liquidity grab. That's a wick.
A liquidity grab of what? External liquidity.
Well, you got to look and see what got ran. These highs got ran.
Old highs, right?
Yeah. Which means these lows are next.
We can't rule that out. No.
Yeah, we'll see, bro. We'll see.
We cannot rule that out.
Hey, huh?
Not possible.
You said what?
Very much possible. You know.
Y'all got anything else?
Nobody wants to ask a question.
Hey, y'all, don't mind us. Ask your questions if you have questions. Hey, we only got 12 people left.
Yeah, because this is the pair trade. So even if we are deliberating back and forth on it, so I'm just like, having fun with it. So if you have a question, any pair, you can ask.
And also, I is a swing trader and is the interest.
Kim, you're picking up bad.
All the time.
Must be that dial-up internet.
Huh?
Kim, yeah, we can't hear you.
That dial-up internet you got. That AOL you got.
Sean, I heard you. I heard you, Sean. I ain't got no dial-up internet.
My bad.
No, I was saying that Todd is a sweater and Andrew is a trader. That y'all go back and forth. And I know that Andrew is seeing the way he trade, but the way Andrew trade on a 2-month time frame is, I mean, I know price is fractal. I see why Andrew sees stuff the way he sees it, and I see why Ty sees stuff the way he sees it. Just
I do. Listen, I do too. I like going back and forth with Andrew because it's always a spirited, conversation.
Yeah. I know. That's why I'm glad it's Andrew and not me. Okay.
Well, but listen, and that's why I always try to tell people whenever me and Andrew have our back and forth, I always tell them I'm not trading this because I don't want people to take losses. Because I'm arguing Andrew. Most of the time I already know I'm talking about a higher time frame, and I don't want to not disclose that and then people take losses.
Yeah, I think Andrew knows what he's doing. I just think that he can't disrespect them fundamentals. Nobody can.
No. I don't disrespect Listen, before I even trade, right? Like one thing I noticed on the chart, whether now, long time ago, whatever the fundamental is saying, that's the same thing the chart is telling you.
I agree.
I agree too.
Whatever the fundamental is saying is the same thing the chart is telling you. If you do your analysis on the chart, you take a trade and you get stopped out or something, bro, you wasn't right on your analysis. It's not because of the fundamental. You didn't look so deep. There are some people who only trade based on technicals. They trade news every day, every time. Why do you think they do that? Because they know what the chart is saying. It's always the same as the fundamental.
Mm-hmm. Or sometimes fundamentally something happens, but technically it's not time to trade what happened, right?
Yeah, it could be ahead or delay. Yes, sometimes.
Yep. Hey, a while ago, when Andrew was when you were asking, remember we were talking about, you were asking, when is gold going to pull back? When is the index is going to pull back? I would tell you, and it's just my opinion. Those assets are in price discovery. So the likelihood of a significant.
No. What is
just,
price discovery? You can't just say it because people don't know what it means.
Okay. Price discovery is when you break the all-time high and there's no structure to the left that you can look back on. It's going to provide resistance or provide a reaction point. The only things on there, or the only things that will provide a reaction point, at least in theory, are those Fibonacci levels that are up there that nobody pays attention to, that nobody understands why those lines are there. Those lines are there because that's most likely where, the traders are going to take profits. But you see those small reactions because really there's no structure to the left. So that's really why I know you guys have heard people use the term blow off tops in bull runs. That's why you have it, because there's nothing providing resistance. So I don't think you're going to get the 30%, the big pullbacks in gold or any of these other assets, because they're in price discovery.
Actually, yeah, for gold, I think like the amount of people owning gold is more than the gold available right now. That's what I heard. So it's like the market is being priced in so much.
That's probably true. I know them central banks have been loading up on it, and they've been loading up on it because everybody's
so for them to get
as debasing their currency.
People need to sell, right? So that they can buy or have their gold. Like, of course, you pay for something and you don't have the thing. So eventually people have to sell for you to be able to get hold of what you are buying or what you pay for.
They have to sell what?
I mean, people, if you have a gold and like probably you have been owing gold from like 1,005 or 1,918, this is a very good time to take profit.
Well, it is a very good time to take profits, but what I would argue is, if you know where you are in the business cycle, again, those nasty fundamentals keep coming up, why would you sell? Because it's going higher, because they're going to continue to print money. So if you don't know anything about fundamentals and you've been holding since 1900 or whatever, then yeah, you're probably a little nervous, a little antsy. We're an all-time high. I need to sell. I got all this money. I'm gonna sell. But if you understand where you are in the business cycle, then you understand, well, damn, it's ran a lot, but this run ain't over.
No, it's not over. That one is true. But what I'm saying,
so if they're going to keep providing this jet fuel to the markets in the form of liquidity, balance sheet capacity, et cetera, then, bro, I'm probably staying on the train. So that's where I think that people that understand the fundamental side and the technical side, I think that's where they have an advantage over just the guy that